Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, January 31st, 2025. S&P 500 currently sitting at 6113. I'm David Zarla. I'm here with Jimmy Chip, Ian McMillan. First thing I want to say is happy birthday to Gene Hackman and the NASDAQ. Good to know that both of them are still alive.
That is good. I was worried there. I was worried about 50% of that yesterday.
Yeah, I tried to cause quite the stir on the team thinking that Gene Hackman had passed away.
Nope, just celebrating a birthday.
Just having a birthday, 95 years old. And the NASDAQ is 40 years old. Kind of
40. Cool. I guess I would have guessed more than that.
I would have too. I had to go double check. I just like Gene Hackman. I had to go double check.
So you're older than the NASDAQ.
Hey. Yeah.
Well, I mean, that's not saying you're old.
You know what though? If I went around saying that, I bet people would be like, whoa, how old are you?
Yeah,
You're right.
That's true.
Yeah, like I'm older than the NASDAQ. Oh my. Well, it's really not that old. 1985, NASDAQ 40. Now, Gene Hackman, though, 95 years old. That's legit.
Yeah, good for him.
I guess you can't blame me for thinking it's possible. I mean, I'm fresh off of Bob Uecker. That's, but man, we had quite the week this week, Ian. What do we see from a price discovery standpoint?
Well, I mean, I don't think anything happened. We're right where we were last Friday.
That's right. Nothing happened. It's like the market didn't even move.
Well, actually, everything's above where we were last Friday.
Yeah.
How about that?
But we had a little bit of shake and bake.
We had another big Sunday night, Monday, scare-a-thon on headlines out of China. If you are stressing over headlines out of China in 2025, I don't know what to tell you.
Yeah, the narrative of Sunday, Monday was DeepSeek, AI platform, China making some outlandish claims yet again. And to Ian's point, if you're taking word from the mouth of China, not expecting it to be a little bit of smoke and mirrors, you don't follow trends much. And that being said, I mean, we did see the largest move in Nvidia to the downside since March of 2020.
Yeah, Nvidia did get hit, and that's an important one. Went below its 100-day moving average there for really just Monday, and it's stayed above since then. I wouldn't really say it's recovered much, but stopped the bleeding for now. So probably a headwind for semiconductors in general.
Well, the largest component by far. And it's holding its 200-day. But the move down was swift, and time will tell whether that's, going to hold. But NVIDIA's 18% of SMH, the semiconductor ETF, it's a large piece of the S&P 500, approximately almost 6% of the S&P. And semiconductors have been a leader. Time will tell. There have been times in the past where semiconductors have not been a leader and the market's held up fine. And we'll see if that's the case. I mean, the S&P 500 closed that gap from Monday and is back near its all-time highs on a daily basis, on the verge of recording a new all-time high on a monthly basis. And so we'll see what that means for semiconductors going forward. I know semiconductors on a relative basis using SMH versus S&P holding an important level so far. That goes back quite a bit, back to February of 24. So 1 year, semiconductors have a 0% return with a lot of movement in between.
Over the last year?
Mm-hmm. February of 2024, we were at the same relative, I shouldn't say 0% on an absolute basis, but 0% versus the S&P.
And last Friday, we're sitting here talking about Apple at its 200-day, and that got some nice pop this week. I don't know. We'll see what's going on with today's candle, but it's higher. So, yeah.
But narratives are narratives. I know I personally wouldn't download DeepSeek onto my phone, nor would I use that narrative for my investment process. I would just use price levels, and we can do the same thing. But the market as a whole, semiconductors aside, and I would say some areas that are exposed to artificial intelligence themes got hit, but a lot of the other parts of the market recovered just fine. And
I think the Dow and maybe the Russell 2000 were green on Monday. I know for sure the Dow was. So very, very quick bounce back from those. Both a little bit more value-ish, I would say.
Yeah, value tilt. And that's a good relationship to bring up, is just growth versus value. And I would say definitely a shot across the bow. We'll see where we go from here. We were into important levels using SPY G and SPY B that go back to 2021.
But now, and then we're right back though.
Right.
Or at least on RPG and RPV. So SPY, the SPY pairs not back from Monday's gap down. So yeah.
But plenty of other areas in the market holding up, and still plenty of pessimism in the market, I would argue. Going back 2 or 3 episodes where we talked about hedge fund deleveraging, record amount of inflows in the money market, plenty of top calling, I would say, out there. And we had a decent earnings week this week from the standpoint of Microsoft, Apple, Tesla, Meta, or Facebook. And always, it's not about the earnings themselves. It's about the price reaction of earnings. And it's absolutely fun watching analysts from big firms be dumbfounded on why Tesla could possibly be moving higher after quote unquote missing earnings. I mean, how many times do we see that, just massive earnings beats and the stock gets sold, or earnings misses and the stock gets bought? That's what we really want to pay attention to, are those dynamics.
Yeah.
And we're closing out the month. 1 month down in 2025 already. Wild.
That is quick one.
Yep. Quick one. And I know Kevin shared some data from Jeffrey Hirsch at Almanac Trader internally here regarding when we have a down Santa Claus rally period and an up first 5 days and first January barometer, which is the situation we're in now. And I think it would maybe surprise people, maybe not, that your average return in that scenario, so you're down Santa Claus rally period, up first 5 days, and up for January as a whole, average S&P 500 return almost 15%.
Hey,
doesn't happen. Yeah, it doesn't have to happen.
Well, I mean, if you say it on a podcast,
then it happens.
Then it kind of does happen. That's the way the internet works.
Mm-hmm. But it makes
Abe Lincoln used to say that.
He did.
Don't believe everything you read on the internet.
I remember when he posted that.
He did. What do you think about gold? Gold had a big day yesterday.
Gold did have a good day, and it's...
Did you buy some?
I did not.
No?
No.
It's breaking out to new highs.
It is. Still has some work to do on a relative basis versus the S&P, though I will say, when you look at that chart, there's definitely some things that are starting to turn here where our clients shouldn't be surprised if we do take a gold position, but that's got to play out. You got to see that trend move out of this range.
I've seen this movie before.
Mm-hmm. Was it as good as Hoosiers?
No, never good. It's never, I don't really do well with precious metals. Never have.
So we'll see. We'll see what time.
It's like a left-handed pitcher. I just don't do too well with it.
No, I understand. But it makes sense that when you have a positive January, that bodes well for the year, right? It's kind of like your beloved Chiefs in the Super Bowl. If they score first, it's probably a thing that you won't turn down.
Yeah, it's good.
And how's the McMillan household holding up? I know you're a Chiefs fan. Kate's an Eagles fan. It's going to be quite the event.
We're doing the same thing we did 2 years ago. So she's living at a hotel for 2 weeks up the street. I got one kid, she's got one kid, and then we'll probably switch off this weekend. I'll go live in the hotel. She'll come back to the house. And it's good. It's really good for the family.
Yeah. Do you guys talk during this period, or is there messaging? No. Okay.
There's texting.
Okay.
At the end of the day, she's my spouse. We do have 2 children together, so we do have to communicate, but very little physical interaction.
What attire will the children be wearing on Super Bowl Sunday?
Connor wants the Eagles to win. He's told us that after the Eagles won this past Sunday, he said he didn't want the Chiefs to win
Oh,
because then he didn't want to have to pick.
man.
So it's just easier for him if the Chiefs didn't go to the Super Bowl.
Oh, I see.
Yeah.
And now he's got to pick.
Now he's got to pick.
Oh, man. Crazy.
I will. And I told him this. I said, listen, you do what you feel is right in your heart, but only one of us controls the college fund. So,
choices.
Just saying. I'm just throwing that out there.
Choices.
I would really hate for there just to not be anything when you're 18.
Well, you know how I indoctrinated my kids is I wake them up at like 2 or 3 a.m., put a Vikings jersey on them. So when they wake up, they're wearing the gear they're supposed to be wearing. So that's my recommendation. Get that Chiefs gear on them at 2 or 3 in the morning, and then the day is set.
You do that for all the Viking Super Bowls?
Yeah. They might have to edit this part. Touche.
I know that is tough to say to another man. To tease him about his football team's Super Bowl appearances. That was uncalled for.
Little dagger, but it's okay. I mean, and Chiefs were one of the teams that beat them in their 4 appearances.
Yeah, early on.
Mm-hmm. In the early days back, right after the AFL. Well, isn't the owner of the Chiefs the son of the guy who ran the AFL?
Yeah, Hank Stram.
Hunt?
No, Hunt.
Yeah,
Lamar Hunt. Yeah. I don't know why I said Hank Stram. Yeah, Lamar Hunt.
Crazy. Well, you guys got 2 weeks down to 1 week now to prepare. You watch it at the house?
No, we're going to watch it in the pool.
Neutral site?
Yeah, I think 2 years ago we watched the first half with some friends and then
kicked everybody out.
I'm not big on watching football with casuals, to be honest.
Yep.
Especially, Kate does this. I will not watch USC football unless you are there to pay attention. I'm not watching football with you unless you're there to pay attention.
I like it. It's kind of like managing money. Not really interested unless we're watching price.
Yeah.
Don't come to me with your fundamentals. Speaking of fundamentals, what do you think about? We got a Chinese New Year, Year of the Snake.
Oh, what's that mean?
That's bad, right?
Probably.
I don't really like snakes. They're cool.
New Year sounds spooky,
but I know there was some talk out there about 1929 and 2001.
Well, we know what happened then.
Mm-hmm. Market crashed, but those were the only Year of the Snakes, right?
Yes, not 2013,
1965. Some pretty good up years in the Year of the Snake.
Yep. 2013, 1989, but those up were over 30%. It's got to be tough.
Data mining. Always looking for something.
Sorry, babe. We're not going to be able to pay tuition this month. It's Year of the Snake. I was positioned incorrectly.
Oh, man. I would not have guessed that in 18 minutes we could cover Gene Hackman, NASDAQ birthday, Year of the Snake, DeepSeek, January trifecta, and Super Bowl digs on another man. We could end it.
Maybe we're just like a bro podcast now.
What's that?
Joe Rogan, but slightly with a financial twist.
Like Theo Von.
Yeah.
We just need some Happy Dad. We need Happy Dad as a sponsor.
That would be sweet.
But I like our sponsor better. I feel like that's a good segue. The Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access 2 of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. With 1 month under our belt, Ian.
Oh, yeah, we get monthly candles.
Monthly candles.
Is there anything that looks good to you? You know what I think looks good? I was looking at this morning, discretionary. Like, even if you look at, like, discretionary versus financials, I think that can make a turn. And then I was looking at discretionary. Well, discretionary versus energy looks tough.
Tough, rough stuff. But yeah, we're on the verge of, we're a few hours away of new monthly all-time closing highs for communication services, discretionary, financials, even technology is on the verge, S&P 500, NASDAQ 100, cloud computing, Argentina, Ireland, the DAX, Euro 50, Bitcoin, Ripple, gold, junk bonds, including the coupon, cattle and coffee. And that's just to name a few. That's not very risk off when people are buying Argentinian stocks and discretionary stocks and
Bitcoins,
communications. I mean, that's a pretty legit list. It's not a complete list, but my goodness, how bearish are things if we're recording new monthly all-time highs in those areas?
Yeah, I mean, even Europe looks good. European financials,
yeah,
out to new highs this week, really last week, I guess. But they have continued higher. They look pretty solid. You talked about the DAX. You said the Euro 50?
Yeah, Euro 50, the FTSE 100, the IBEX.
Is that Spain?
I mean, there's some pretty strong strength internationally going on to start the year. And then when we look at the top performing sectors year to date, healthcare, financials, communications, materials, industrials, consumer discretionary, the strongest industries year to date, gold miners, internet.
Wow. Yeah. Internet's been strong.
Regional banks, biotech, home builders, airlines, software. These are not the areas you see lead if it's a downtrend.
No.
And when we see January up, Ryan Dietrich's got some good data out there. When we see the January up 3% or more in January, I know I mentioned 14% when you have a positive January. When it's up 3% or more, full year calendar is up about 20%.
Wow.
About 90% of the time.
Another 20%. Could we do it?
That'd be pretty wild.
We'll go in a straight line.
And to your point about straight lines, I know Mike Siccardi shared data from X about the S&P 500 has been up only 5 times out of the last 10 Februaries, which matches seasonality too for this time of year, that February typically is a negative month, about a 50-50 proposition. So strong January, could see a weak February, would be perfectly normal. And if February is not weak, how strong is the year going to be then? Time will tell.
Yeah, got to stay involved.
Yeah, it's an uptrend until further notice. And I think when you look at sentiment again, I know there was a headline out there that Morgan Stanley Wealth Management was telling their clients to cut back on stocks. I always find that interesting. And this is coming on the back of, record inflows into money markets and hedge funds deleveraging. I don't see anybody out there talking about.
They didn't ask for what Client First is telling their wealth management.
I know they should listen to the podcast. They should listen to the podcast.
No one at the New York Times listens to our podcast. That is
borderline communism. That's what that is. But yeah, seasonality, typically we see a weak February. That shouldn't surprise us if we see that in the coming months. If we don't, that's how you use seasonality. If you don't have a weak February, that's definitely something to pay attention to. But right now, the offense has the ball. You look at something like bullish percent for the New York Stock Exchange. We flipped to X's a couple of weeks ago. It's from a position of the field where you could see the offense put a drive together. Time will tell. But rising 200 days, it goes back to what we talked about last week about checking boxes. And right now, the majority of the boxes continue to be checked for an ongoing bull market, which I know might be hard for some people to hear. And nobody really knows. I don't know where we're going to be. Yeah, I just love this time of year is just so funny to me because there's so many of these large firms that come out with price targets. How about we just let the trend be the trend rather than have price targets?
That'd be amazing. Price targets are tough. I think they're tough.
Why do you think they are? Why do you think people, why is that a thing? Why are price targets a thing?
I don't know.
I think it has to do with human behavior and trying to give people a false sense of confidence.
Yeah, I think like it's not enough to say like, oh, we recommend this stock. Like, oh, well, how high do you think it could go?
Right.
I also see, and I've seen this multiple times in my career, where price targets will be raised. Some XYZ firm raises price target on a stock and it's still below where it's actually trading at.
Yeah. Well, my favorite is when they change their rating from a sell to a hold.
Well, if you didn't sell it by now, you might as well just keep it.
Yeah. Or like,
well, you're
how
screwed. Maybe it could bounce 98%.
How do I hold something that I sold? You told me to sell it. Now you want me to hold it. I don't have it.
John, you want these back? Didn't you just sell them to me last? Yeah, but my broker said now I need to hold it.
Crazy. Yeah, I think it has to go back to that human behavior of wanting certainty. And I think the beauty of managing money is that every day it's uncertain. And so you learn how to live with uncertainty and manage that risk rather than trying to strive towards like having certainty. And, you think about like going to the doctor, everybody wants to hear the doctor tell them things are going to be fine. No one wants to go to the doctor and the doctor be like, I don't know, man, I got your blood work back. And I don't know. People don't want to hear that stuff. They want someone's opinion as if it's a fact. They want to know that the market averages 9% a year. Therefore, please tell me, Mr. Big Bank firm, that everything's gonna be okay and we're getting 9% again this year.
Yeah,
that's not how it works.
Why do you have a CFA if you can't tell me that?
Right. There's a lot of 3-word phrases in the English language that are really important. I'm sorry, love you. The one I think people struggle with the most is I don't know, because it makes you seem like you're ignorant.
My friends don't like it, I'll tell you that. And they want to ask me about the market. My friends hate it. They don't hate it, but I think that they roll their eyes.
Right. And it was a funny conversation in the kitchen with my wife on Monday. And I said quite a bit of market movement to the downside today. And she goes, well, why is that? And I said, well, more selling than buying. And she said, I know that, but why? More selling than buying.
Just was China.
So it's a fascinating human characteristic that we have, is that we just love certainty, with the irony being that we live in environments, whether the environment around us, markets, relationships, they have uncertainty. That it's human. When humans are involved, there's an uncertainty, and we like nothing better than certainty. And I think that's where the price targets come from. I think people just want to hear everything's going to be okay when we don't know. I have no idea where the S&P 500 is going to be on December 31st, 2025. No idea. No one else does either. So stop turning into financial TV and think because that's the other thing. You think you somehow think because you heard about DeepSeek on Monday that you knew what was going on. No. By the time it's news, there's no edge. There's no edge in information.
Yeah. And if you sold, well, now you're really in a pickle.
Yeah, you're kind of in an emotional purgatory, aren't you? Interesting. So what else, Ian? What else can we highlight for our listeners from the prior week, month, year to date, overall market environment or sentiment that's worth highlighting for our listeners that you're seeing?
Yeah, Bitcoin still, it's still hanging in there. It held up well, still sideways. Some other crypto stuff moving. Got a nice magazine cover. It's a little...
Yeah, what was that? What was the magazine cover?
I think it was just for Forbes.
Forbes?
We'll see.
The one with
Sailor?
Michael Saylor on the cover, the CEO of MicroStrategy, which is the poster child for Bitcoin. And people are comparing it to the other times such covers have been released. And I mean, granted, Financial Press does have a really bad track record of posting hyperbole at tops. And so it's going to be interesting to see how Bitcoin performs from here. Maybe it is another top in Bitcoin that Forbes marked. Maybe not. Time will tell. The fact that we have all these areas recording new all-time highs, and we have just big, how do you say it? Brodigan bases, you know, the guy who's got a similar Twitter handle to you.
Oh, Roach.
Yeah, John Roach. I mean,
Brobden, I don't know.
Brodigan base.
Brobden.
Yeah, base. So in other words, hard to say, but it's related to just massive bases. And here we have American Express versus the S&P 52-year base breaking to the upside. You look at something like Virtu Financial, not as big of a base, but still pretty large. I mean, if this were to break to the upside, and I should say it's not versus the S&P, I believe it's on an absolute basis. I mean, that's a 7-year base. You've got JP Morgan versus the S&P. That's a base that goes back to 1988. You've got something like Brinker International versus the S&P, a base that goes back to 1994. So you have all these large bases out there. And the reason why this is significant is the old mantra, the larger the base, the higher the space. And if these things are breaking to the upside, pretty important information on risk taking in the market. We'll see. Time will tell. I know that's an old phrase that we use on here, but we simply don't know what the future brings. But man, there's a lot of demand in the market currently, and it won't be without future corrections. We typically have 10% correction per year, 5% corrections per year. Like you said, it doesn't move in a straight line. So we'll see. So I don't have anything else, Ian. I know we covered quite a bit of ground.
Good start to the year.
Great start to the year.
Yeah, we got 11 more months to go.
11 more months. So I appreciate you being on here. We appreciate everybody listening. Please share us and give us a high ranking on your favorite platform of choice. And make sure you tune in again next week.
Yes. Have a good weekend, everyone.